Good day. My name is Jóhann Ívar Björnsson and I am a technical consultant at AGR Dynamics. I know that many of the people attending this webinar today are current AGR customers, some of which I've even had the pleasure of working with. But for those that are not current customers, I'd like to briefly go through who we are and what we do before I move on talking about our new standalone financial planning module. So, who are we? AGR is a company providing expertise in supply chain planning and forecasting, and we've been doing this for over 20 years. The company is split into two parts. One part is the software development with our in-house development team, and the other part is consultancy. This is both consultancy for our software, but also consultancy around supply chain best practice processes. Our head office is based in Iceland, where most of the development occurs, but our main markets are the UK and Scandinavia, with offices in Canada and France as well. Our software is an add-on to your current ERP system, so the main data registration occurs and resides within the ERP system. And then we offer a standard data connector to Microsoft solutions, as well as data connectors for other ERP systems. A little bit about our customer base. These are just a few of our customers that we have been working closely with for the last year. We can roughly split the customers into two groups. On one hand, we have wholesale and distribution companies, where we are using AGR to create forecasts and managing purchase orders from central warehouses to external suppliers. On the other hand, we have retail companies, where we are doing both the purchase orders to external vendors and also managing the distribution from the warehouse to the stores. On the retail end, we have some customers that range from having a few stores to customers that have more than 1,000 stores. If you want to learn more about any of our customers, we have case studies on our website that you can check out. We have 3 different module categories within our product offering: planning, assortment, and inventory. In today's webinar, we will only be looking at the financial planning module in the green planning hexagon, but feel free to contact us afterwards if you have any questions regarding our other modules. Now, if we focus on our standalone financial planning module, we call it standalone because it is a module that is independent of other functionality within AGR, and it has its own inputs and outputs. Therefore, it can be installed either on its own or besides other modules, such as the inventory modules. The financial planning module will give you control and oversight over your financial plans, where you can compare plans to actual figures as time passes, and revise plans at any time, which is useful when unexpected events like COVID-19 happen, and you want to be able to react quickly with revised plans. Your plans are then easily exportable to your accounting system or analytical tool. The processes within the financial planning module are split up to revenue planning and expense planning. The difference is mainly that in revenue planning, we plan sales, cost of goods sold, and discounts together down on the product group, while in the expense planning, we plan other general expenses down to account keys, such as salaries, employee cost, marketing expenses, and such. The two processes have their own different inputs and outputs. For revenue planning, we read from your accounting system, or ERP, the historical figures of sales, cost of goods sold, and discounts, while we read other general expenses in for expense planning. In both cases, we are using your historical figures as the baseline for your planning processes. The output is then the plan for future periods. In revenue planning, that is a plan for sales, cost of goods sold, and discounts in values down to company division and product group, while in expense planning it is planned expenses down to company division and account keys. The plans are then easily exportable back to your accounting system, ERP, or any other analytical tool that you might have. And for those of you who are already doing bottom-up planning of sales in the inventory module, you can compare the outcome of the two planning processes: top-down strategic planning from the financial planner versus the bottom-up operational planning in the inventory module. We say that both revenue planning and expense planning is done down to company divisions, and some might be wondering what I mean by a company division. The answer is that it depends a little on the business. It is common for retailers to split the financial plans up by stores, while wholesalers might split the plans up by customers or markets. In addition, we might want to plan some expenses like employee costs on our IT department or marketing department. This is what we are referring to when we talk about company divisions within the financial planning module. Let's now take a look at the user interface of the financial planning module. And please, if you have any questions, please don't hesitate to ask. You can ask anonymously in the webinar Q&A box. Let's first take a look at the revenue planning. Here we can see that we are looking at data broken down to product group on level 2 and division, because those are the two columns that we have in the view. A division for a retail business would typically be a store, while for wholesales a division could be a market if the business is operating on multiple markets. In this example, we are planning sales down to stores and product groups on level 2. You can see that we have drilled down filtering with drop-down menus where we are filtered on one store and one parent group of the products. And we can navigate between stores or parent groups. Also, we can take out the drill downs to see a less filtered view on the data. So if we remove drill downs on the stores, we now have a view that shows us all of the stores. We can use the total icon to get an aggregated total for all the data in the view, both for rows and for columns. Now that we have removed the drill down filter on locations, we can choose to look at the data broken only down on product groups by opening the view settings pane and clicking out the division column. So now the view is showing the total across all stores for each product group. This is one example of how we can choose the level that we want to work on. First, we set the appropriate filters on the data in the view, and then we choose how to break the data down. Now let's click the drill down on stores back in to look at only one store and look at what our data series are showing. You will see that the data series name ends with ACT forecast. This indicates that the data series show actual historical figures for all periods that have passed and forecasted values for all periods that have not passed yet. The cells are green, and that means that they are editable to overwrite the baseline forecast. The baseline forecast is the historical figures from the same period from the year before. So for May 2020, the baseline forecast for sale is the actual sales for May 2019. A typical planning process would be a 12-month rolling plan, so let's set the period filter for 12 months, including the current month, in the view settings pane. Note that in this example we are planning down to months, but this module also supports weekly plans. Now, if I want to overwrite the forecast, I can choose a single month for a single product group and input my override value, like so. My override value will be written into another override data series that we can decide to display in the view by clicking it in the view settings pane. If I change my mind, I can erase the value from the green cell and revert to the baseline plan again. If we want to edit the plan on a higher level, we can edit the total column for 1 month, affecting all product groups for that particular month proportionally. In the same way, we can edit the row to override the plan for one product group over the next 12 months. Note that edits can be done by inputting absolute values, or we can input percentage changes like plus 20%, and overrides on an aggregated level will always be distributed proportionally down to the lower levels. Now, as I talked about earlier, the revenue planning is not only a planning of sales, but we can also plan sales at cost and discounts. Instead of planning sales at cost and discounts directly in values, we can use data series that show us calculated percentages. This way, we can plan our discounts in percentages and our sales at cost in either a percentage of sales or the percent margin on sales. By editing the discount percentage, we are editing the underlying discount plan in values to match the percentage that we put in. And editing either the sales at cost percentage or the margin percentage will edit the underlying plan for sales at cost. You can see that for the product group belts, we have in May 2020 a planned discount of 10%. And the sales at cost percentage is planned 85%, which leaves a planned margin of 5% for that month. Now, if we added the discount plan percentage to 5%, that will then be reflected in the margin to show a 10% margin. If we then added the sales at cost percentage, that will also affect the margin. And we can also set the margin target, and that will then affect the sales at cost percentage plan. Now that we have a rolling plan that is updated with actual figures for each period when the period has passed, we might want to fix the plan at a certain point in time. Fixing the plan simply means saving the rolling plan into a version of the plan that will not change over time. This can be useful, for example, if we want to plan the whole year before the start of the year, and we later want to compare the actual figures to our start of year plan as time passes. In this view, I can see the plans in values for sales, cost of goods sold, and discounts. On the one hand, we have the ACT forecast rolling plan series with actual figures for past periods, and on the other hand, we have the saved plans from before the start of the year. If we want to compare the two, we can do this graphically by clicking the chart button to get a visual display of the saved plans versus the ACT forecast data series. If we compare the sales value ACT forecast to the sales value plan from the start of the year, we can see that the actual sales shown in the ACT forecast series have been somewhat lower than originally planned. Now, let's say that there was some recent event, like a global pandemic outbreak that we did not anticipate in our initial plan for the year, and it has a significant impact on our business. With this financial planning module, you can modify the rolling plan at any time, for example after the first quarter, and then simply fix the plan again using the Fix Plan action. This saves the current ACT forecast plan into a new data series that we can select into the view as well from the view settings. Now we have two versions of a plan for the year. One from before the start of the year and one from after the first quarter. Now if we go over to the expense planning, we will see that the process there is very similar. Here we are planning general expenses down to account keys and company divisions. As we are now planning expenses such as salaries, cleaning cost, or employee-related expenses, we might need to plan on more divisions than only stores, for example, our IT department. This is done the same way as in the revenue planning, as we have ACT forecast series with actual figures loaded in as soon as periods pass, and also with the ability to move up and down levels to work on the level that we want. Only now we can move up to a parent account key if we have account key hierarchies. The expense plans can also be fixed the same way as the revenue plans and read over to your accounting system or analytical tools. I have now covered the basics of the standard financial planning module. Keep in mind that as with any other functionality in AGR, the module is highly customizable to meet your needs. If you have any further questions about functionality pertaining to your specific business, I would be happy to go through the system with you personally. Just send me an email and we can set up a meeting. Also, we have a number of interesting webinars planned in the next few weeks, so definitely keep an eye out for more information, which will be released later this week. Thank you.